Hey, good morning, guys. It's Greg with Trading the Pip. So today I want to go over Denison Mines. So as you can see, we already have the website pulled up. And like I always tell you guys, always do your research, man. Pull these websites up, find out about these companies. As you can see right here, it's a Canadian traded company. It's also trading on the New York Stock Exchange under ticker symbol DNN. We have it at 106 right now, positive 2 cents. Always click on your About Us to find out some information, corporate profile, all this other stuff right here, projects that they're working on, overview, core projects, so on and so forth. Investors. Investor Relations tab to me is one of the most important tabs that you can go to. You have stock info, presentations, financial reports, corporate filings, which is your SEC filings, financial calendar events, what's going on, analyst coverage, what the analysts are saying about the particular stock. And you have videos about the company, and you also have news, the press releases that they put out 2021 on down to 2014. As you can see what they put out, right? And then you have clean energy, uranium 101, uranium industry, and glossary of terms, right? So if you don't know, this company deals in nuclear energy. They saying that it's clean energy, uranium, right? So we're gonna go ahead and push forward on our Robinhood account. As you can see, they have it, Canadian company, energy, and it's in industrials. 57% buy rating right now, and it's selling for 105 right now, right? So positive 2 cents on Friday, down negative 1 cent after hours. We're gonna scroll down and show you where we got in at, which was 114. Shares, we got 300 shares, portfolio diversity is 437, and it cost us $342. We've been inside this company now for a little bit over a month. So today's return is positive $3. Total return is negative $27 or negative 7.89%, right? And then we have a total market value right now of $315. So we lost $27 in value over time. We can kind of scroll down, click on show more to give you another overview and read more. And pretty much gives you what's going on in the company, when it was set up, May 9th, 1997. It shows you the highs, today's lows, the opening price, the volume, 52-week high, 181, 52-week lows, 30 cents, right? You kind of scroll down, you see related lists, so on and so forth. Kind of scroll down, I want to show you exactly the reason why I use this particular stock, right? So those 300 shares we've done cover calls on, but we did cover calls on March 22nd. As you see, we said we'll sell at $1.50. 416 was expiration, which was yesterday. We received $39 for the deal, right? 3 contracts, 13 cents a piece. We received $39. So we scroll back, we see March 22nd. So we almost had it for a month, right? April 22nd would be a month, right? So we spent $342 and $1.14 on March 22nd. Obviously, the price of the stock has dropped down with negative $27, like we said before. Right there, right? So what are we gonna do about this? Well, the first thing I'm gonna do is click on Trade DNN Options. We're gonna click on Sell Call. So you see that the next one is expiring May 21st. They're not offering us anything for the one that we got beforehand, which was 1 cent. So if we go up, we see that they're not offering anything for the other strike prices as well. 1 cent is nothing, right? They are offering 13 cents per share at $1 strike price, which would make us 1 cent below where our cost basis was, right? Because remember, we bought in for 114, so we'll be 1 cent under that, which means that we're going to be negative, right? In this case, we'll be negative $3 because we own 300 shares. But because we've already did a cover call, we're actually positive, and I'll show you that by taking a look at our spreadsheet. So this is the spreadsheet for DNA, and I'll go ahead and remove this so I'm not confusing anybody. And this is what we received for April. Our April premium when we did it in March, right? 13 cents or $39. Our new cost basis, which is the 13 cent minus the 114, is 101. So actually, it's not on Robinhood, but our actual cost basis is $1.01 per share, or $303. So yes, we did buy at 342, and yes, we are negative. Take a look at it real quick. we are negative $27 and it's saying 315, but overall we're actually up because 303 is what we actually spent now, because all that's going to be minused out. Now we have a couple of things that we can do in order to get it down even lower, and I'll show you. So clicking on trade DNN options, we have a couple of things. Sell call. Once again, we can't do anything really for the May contract at 150, but we can go down lower and decide to just sell our contract out at $1 for less, take a small hit, and be done with our 300 shares to sell it at $1, right? Because that's what we would be agreeing to sell it at. So if it goes up in value, we pretty much, you know, the contract would still sell. If it went down in value, the contract would still sell because we said, hey, we were selling this at $1. Anyway, we could decide to go over here and go back 1 month. So we go up now, we say we can sell at 150 now. 150 strike price, they're willing to give us 8 cents. So Monday, we hoping that it's still at 8 cents. We'll put in for 7 cents, so hopefully we get filled at that point. But now we move back 1 month and we go back to our spreadsheet. And even though we have May premium received, we would change that to May/June, because what I would want is to not have any misunderstanding about what's going on, right? So I'll put May/June premium, and then I'll put 0.08, and then it adds it up for me, $24, right? So it automatically pushes this new cost basis down to 93 cents or $279. Then when we go back to take a look at what the price was for Denison Mines, is 105. Once again, we were negative $27 with a price of 315. And then we go back to our spreadsheet, we're at 279. We can automatically go ahead and click on our calculator and say, hey, 315 minus 279. And then we come up with our difference of $36. So we're positive $36. So if we decided to sell our shares off in June, then we would still be positive $36. So that's how we moving. That's how we still stay ahead of the price going down. Now, another thing I want to go into is actually what E-Trade is saying about the price analysts, so on and so forth. And we'll kind of just look through that as well. E-Trade. So we have analyst price targets. In the last 3 months, 4 ranked analysts set 12-month price targets for DNN. The average price target among the analysts is $1.49. Analysts compare their price target to the current market price of the stock to determine how much potential upside or downside movement there could be in the stock price, right? So they're saying average price is $1.49. The high is $2.25. The low is $1. So right now we're close to that dollar low. So we just take a look, and this is what they're saying. The high, the mid, the low, we're close to the low. And then we go take a look at what the analysts and who they are. We can look at their articles and so on and so forth. But on April 14th, Katie LaChapelle gave a price target of $1.59. March 24th, Brian MacArthur gave a price target of $1.35. Mike Kozak gave a buy on March 22nd at $2.25. And Craig Hutchinson gave a hold on February 24th at $1.23 as the price target. So all these people have given a price target, and we haven't hit that price target just yet. So what do? Right now, we're in the low section of the price target. So we're gonna be looking at buy. So basically what I'm gonna do is I'm gonna go over here, and we already know what this information is saying. We're gonna go right back on trade DNN options. We're gonna click on sell. We're gonna click on put. Expiring May 21st puts. $1 strike price. They're willing to give me another $8. So what am I gonna say? They're willing to give me $8 for another strike price for another 300 shares. So I can easily go right back to my spreadsheet. So I'm gonna do this in. They're gonna lock in. Basically, it's gonna cost me $300. So they're gonna put $300 to the side. If the price goes down to $1, I will buy those shares. So what we're gonna do is go back to our spreadsheet, and instead of that being 18 or 8 cents, we're gonna put 16 because it's going by 300 shares, right? So now we have 16 cents that's locked in there. It's $48. Automatically pushes our new cost basis down to 85 cents, and we have $255 now. So original cost was $342, now we're down at $255. If we then go back to our calculator and said 315 minus 255, we're now at $60. And I know people are saying, well, you spent another $300. Well, actually you didn't. The other $300 has been put on hold to see if you can buy the shares at $1 a share. If it does not drop down to $1, your $300 will be released to you on May 21st. If it does drop down around that time frame, then it would use that $300 to buy the 300 shares for you at $1. Now your shares owned will change to 600 shares, right? And at that point, you can go ahead and put in another contract to make a couple of more dollars, but it's also going to change your cost value on top of that. So this is why I like doing the covered calls so much, because you just do the math, and you sit down and do the math, you'll come out ahead with a little bit of money. That's how I look at it, right? So anyway, we're going to scroll on down into Yahoo Finance, and they have it as overvalued. They have a chart event, bearish momentum, short term 2 weeks to 6 weeks down, mid term 6 weeks to 9 months down, and long term 9 months positive plus. We also have some information, some news that they came out with that you can read and go over. And then we can go over here into the NASDAQ filings. This is the SEC filings. They have a 6K, and they're just basically putting their 6Ks out, and 40 Fs or 40 Foxtrots, 6K, so on and so forth. So you can go through, click on it, download it, read it. They also have dividend history and a whole bunch of other stuff that are in here that you will find interesting. And so, hey man, always do your research when you're dealing with these different companies. Once again, Denison Mines is the company I just went over, and covered call options is pretty much what I'm doing. This is how I generate that income on a monthly basis with stocks like Denison Mines. So we're just going to average that thing down until it starts going back up in value, but we're going to do it via covered calls so that we're generating way more money. So we're generating money on top of collecting more shares possible. Anyway, you guys have a great day. I appreciate you looking at the channel, liking, subscribing. Hey man, please keep liking and subscribing the channel and helping me out with that. Hey, have a great day. Bye.